Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to be talking about Zoom stock. We're going to be doing an entire breakdown of this company. We're going to go ahead and look at the charts, support, resistance, and then we're going to talk about the fundamentals, highs, the lows, stuff like that, and kind of the overall earnings, stuff like that. Everything about this company, guys. I hope you guys enjoy it. But before we jump into the episode, right now we are doing the AirPods giveaway, so it's super simple on how you enter. All you have to do is like the video, subscribe to my channel, and then like my Facebook page, Carter Farr. Once you guys do that, you guys will be entered, and then you guys can be repping a new pair of AirPods. So it's super easy, it's super convenient. And then we're gonna be announcing the winner most likely next week. It's just right now the entire state that I live in is under lockdown due to the virus. So let's jump into the episode. Hope you guys enjoy it. Roll the intro. Let's go. Bam! So over the past couple of months and really almost the entire 2020, the stock market has honestly been very, very volatile. As you compare it to, any other year before, we just had steady increases in growth. But this year, we've had some days where the stock market has gone up 1,200 points. The next day, it's been slammed down 1,300 points. Next day, it's up 800 points. Next day, it's down. So really, it's just been a crazy time to start investing, kind of get your, the ball rolling. But Zoom stock is a little different. There's no correlation with Zoom stock with the entire market, which is kind of a cool little thing. Just today, Zoom stock's up roughly 25%, so that's a lot, guys. That's a lot. But really, one of the main reasons why I think that Zoom stock's getting more popularity is because a lot of schools, businesses, and a lot of high schools, colleges, they're doing online classes and online work. So Zoom is a video communications company. So it's very similar to like a Skype or a FaceTime. The benefit of using Zoom is it's affordable and you can have a lot more people on it. As you go ahead and let's say do FaceTime, you only can have up to like 4 or 5 people actually using the video. But with Zoom, I personally used it and we've had roughly around 9 people, and it's honestly very easy to use. You can use it on computers, phones, different types of, electronics. So it kind of diversifies to everyone. It's not like a certain, a certain electronic device. So right now the company's valued just at roughly $16 billion, and honestly, I think that is a little on the high side in my opinion, just because the stock's trading at recent highs. And one of the things that you always have to keep in consideration when you're looking at companies that are moving this much is you got to understand that you have to realize that the train may have left the station. So what that means is the stock's already up 25% in a single day. So now if you get into it, you're getting into it honestly at a pretty expensive price point. You're getting to it, when it's hitting over that, 70 on the RSI line. I can almost guarantee when we go ahead and look at the charts, it's going to be over that. But the reason why is because you have to look at the relative volume. That's very important when you're looking at a stock like this. And another reason why it's kind of expensive right now is because the float on the stock is pretty low. The float on the stock's at 102 million shares. So what the float means, if you guys don't know, that's how many shares that's publicly traded. 102 million may seem like a lot of shares, but as you compare it to, let's say, Ford has 3.89 billion. Yes, billion with the B, not million. So you guys can clearly see the difference of, let's say, Ford, which offers a very large cap company, has a lot more shares available. As you compare it to like a smaller or mid cap, that's what I would consider this, maybe a mid cap stock. This stock's going to obviously carry more risk. It's not going to offer a dividend, and it's just going to be a little more risky to have in your portfolio. So one of the main reasons why I think that Zoom is considered a mid-cap company is just because they do have a little bit lesser of a float as you compare it to Ford, just like we talked about. Another reason why the stock is honestly very expensive is supply and demand. When the demand for the stock is very high, we have that price movement just because of the low float. So low supply, high demand, more expensive. Another thing that you guys have to realize about Zoom is the next earnings report is most likely going to beat expectations. I can almost guarantee it just because everybody's using the software right now just because of the virus going around. And what happens when the virus goes away? What's going to happen? More people are going to go back to work, back to colleges, face-to-face interactions, and that's going to cause the stock to go down in value. But now the next thing, let's go ahead, turn to the computer, look at everything about the company, support, resistance, where I see it in the future. Let's go. Let's jump to the charts. I don't know. Alrighty guys, so the ticker symbol for Zoom Communications is ZM. So honestly, it's a very easy, ticker to remember. But look at this stock. This stock is up already 18% just today. And as we compare it to, let's say, SPY, which is just the overall, S&P 500 ETF, that is down just at 1.27. So you guys can clearly see that, this stock and the overall market really don't have any correlation. Just because that other stock has gone up, 20% and this has fallen, 1.2. So you guys can clearly see no correlation of this stock. So as we go ahead and look at it here, you guys can clearly see that on the daily chart here, this 200 moving average line really uses it. The stock uses it as some support. So you guys can see it hit it once, kind of moved its way all the way up here. So, there could have been a good opportunity here, if not, at this 137 mark. But, that's kind of easy to say. Let's go ahead and look at the yearly chart. So as we go ahead and look at the yearly chart, you guys can see that the low of the stock's roughly $59. It slowly kind of climbed its way all the way up to almost around $100 before we had some sell-off here. This is the one thing that is a little concerning when you're looking at this stock, is kind of before this corona virus started, coming about, we've had this stock kind of going in this little bit of a downward trend. So after this whole coronavirus comes about, what should we expect of this stock? Should we expect this to go back to the recent lows, get back in the trend? Or is this a good marketing tactic that these Zoom Communications have, started doing? And will this stock squeeze to $200 or, $300? The overall thought process of this is honestly, it's pretty simple. I think this stock right now is a little overvalued, just because the stock is at $159 and with a float of 102 million. And that gives a total valuation around somewhere around $16 billion. Now, obviously, that is an ungodly amount of money. So right here, I do think it's a little overvalued. And you guys can clearly see, looking at this RSI line, I think it's still, on that overvalued mark. You guys can see when it's over this 80 mark, really over the 70 mark, it gets in this overvalued territory. So when it's in that overvalued territory, you guys can clearly see we get some sell-off. We get more sell-off, and, as it comes all the way down here in this undervalued, we get more buying pressure. So what I can expect from this stock, after this whole coronavirus kind of, comes about, I honestly think we'll most likely get some sell-off, at least back down to maybe around the, 105 to 120 mark. The reason why is because I feel like that's a fair valuation. I don't think this is worth, that much money. And one of the main reasons why it's been just getting pumped up over the past, month or so is just because this whole coronavirus kind of, started coming about. People needed a way to communicate, so they went to Zoom, and Zoom has been affordable. It's been very easy to use, but overall, looking at the stock perspective, I think it's overvalued, and I think it's a little, on the overvalued side. So I think buying it, at the 159 area, way too high of an valuation. I think maybe getting it around, $100, at these recent highs would be a fair price. Just because if you go ahead and look at this, guys, let's draw this out so you guys can see it a little clearer. So look at this resistance. You guys can see it's hit it twice, right there, boom. So one thing about trading and overall just investing is old resistance comes into new support. So as we go ahead and see it hit once, hit it here, almost hit it here, but we didn't get enough buying pressure. As it kind of broke above this now old resistance is new support. So you guys can see when it came back in contact with it, boom, used it as support. So you guys can see really a fair valuation would be getting it at around $100. I think it would be very easy to get. Obviously, this stock does not have a dividend, or that would be more intriguing for me. But overall, this is still a pretty decent company to invest in. And I do think a lot more people should look into this, just because it's it's like Skype, it's like FaceTime, and it's very easy to use. But it's kind of a company that after this whole hype's gonna happen, it's gonna get slammed back down. So getting in at 153 right now, it would not be the best. Maybe around $100 to about $80, I think would be a pretty decent buy. But alrighty guys, that is it though. Hope you guys enjoyed the episode, and if you did, drop a huge subscribe down below. We'll see you guys tomorrow in another episode. Take care, everyone. Stay happy, stay safe, because our state, Michigan, just got locked down. So don't forget about the AirPods giveaway. We'll see you guys tomorrow. Take care, guys. Peace out. Bam.